Martu, MD at Asset Management and Head of Research at Wing Fung Financial Group, is now joining us on the phone line. Mark, what do you make of the China PMI data? Is that worrying in terms of 2019? It could take the overall growth of the globe down if this number persists.
Thanks for having me. I tend to think that the PMI figures for mainland China is making sense exactly because the directions for different measures, both for the small and medium size firms as well as for the larger state-owned enterprises, are basically in the same direction. I think it is very good sense, and I think for the coming few quarters, maybe the whole market is going to have the same concern that the downward position as well as the expectations are going to in that direction. But of course, the authorities, the government has already been mentally or psychologically prepared and has exactly the same expectations management for the public. So right now, we investors, the markets have to reflect that kind of expectations a little bit, and actually you can see that in the stock market in Hong Kong is actually undergoing that kind of expectations management as well as the market actions.
Given the kind of history that has been there between the US and China in terms of trade war for the last many months now, there's a 90-day pause which everybody is now waiting for. What will be the outcome by the end of it? How is that likely to impact the macro, the economic growth for China going forward? What is your sense?
Thanks. I think it is very important to be realistic and practical. 90 days is not a very long time frame, as long as the details are concerned. So we can only say that we have to be optimistic on a larger scale strategically. But for the tactical side, we have to be prepared for the worst outcomes, and investors in the market are exactly thinking about it. And also, we have to think about the enterprises, the actual businessmen who do the decisions on the real world, on the main street rather than on Wall Street. Actually, they have to take a few years to have the factories built, to hire workers, to have the plans going forward, rather than making a phone call and to get the positions in and out. So it is very difficult for them to make that decisions in that kind of uncertainty, because just a phone call or tweet post or by Donald Trump is going to make a whole lot different for stock market, for the asset market prices, but not in the real world decisions as well as the real world workers' welfare. So I tend to think that the PMI figures, all different kinds of economic data, are going to reflect that. Despite the fact that we are going to be optimistic, we have to be a little bit practical in that kind of sense.
Recording? Yeah. Huh? Listen, guys, recording now.
Right, Mark. Right, Mark. Can you also just talk to us that, when you get such sort of a slowdown as far as commodity, China is concerned, commodity market lifting, commodity sentiments improving across the board, very difficult?
Yes, exactly. It is a very, very sharp observation. The commodities prices, basically, we have to determine it in two main areas. One is the actual supply and demand concerning the real world, the actual economic actions. For example, the economic recovery that has been with us for the last decade. But on the other hand, we still have to take care of the speculative forces. So combining both, we're going to see some kind of quite bearish actions are going forward for the commodities, and that kind of expectations are not going to be reversed at any time soon.
Point taken. Thanks much for joining us to give us your perspective on what transpired as far as the PMI data is concerned and what is likely to be seen.